Okay. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi taala wabarakatuh. So today we are presenting assignment 2, which is portfolio fund management. So before I start, I will introduce first my name and my group members. My name is Zuri Fauzan bin Zuraimi.
My name is Nur Alakisina binti Muafami.
My name is Muhammad Liwaudin bin Hamdi.
Okay, I will continue for the first one, for the part A, which is the investor background. Next. Okay, for the personal info, our client is Mr. Ahmad Imran. 26 years old, 26 years old and unmarried. And then as a old assistant accounting, and also his liquid saving is 5,000 and 10,000 in unit trust and stock. So basically, his defined life goal as a valuable lesson learned from his past experience. So the main objective is to facilitate a disciplined shift to the speculative trading to the structure or goal-oriented investment plan. So this is how to achieve financial security and also a long-term wealth accumulation and without emotional strain. So I will proceed to the next part, which is investment experience. So for the investment experience, has a two part here. The first one is active in stock and unit trust. The second one is face loss due to speculative behavior. So basically, as a young professional with a stable income, he passed a solid foundation open to his build. So his current asset is actually 10,000 in liquid saving, and additional 10,000 already invest to the unit trust and stock. So the critical part of his history of investment is not more on theoretical. He has been active participant and has aspired firsthand of speculative behavior. So this experience lead him to a crucial part, which is he need to discipline and structure again the strategy to replace the unpredictable of the speculations. So for the next part is financial goal and time horizons. So here have a four parts of financial goals, long term and retirement at 1,500,000 for the 30 years of horizons, and then medium term RM 15,000 for property as a down payment, 5 to 10 years, and then short term 12,000 for emergency fund, 1 or 2 years. And motivation is need to learn discipline and also structure again the investment strategy. So here, as a clear time bound set goals as a sound financial plan. So Mr. Imran has an objective that already distant the time horizon. So so he actually aimed for the 150,000 for a property for the down payment, and also the key milestone in a building for the personal asset. And then also his target for his financial is a personal milestone to master and then to adapt the discipline of investment strategy that can be sustained throughout of his life. So I will go to the next part, which is part B. Part B is investment objective and aim for the risk tolerance assessment. So here I have a two part, investment objective and also risk tolerant. For the investment objective have a retirement, property, emergency fund, require annual return, and also clear shift for speculation. So by translating this, the objective of this plan is more to on his retirement, save property, and also to secure his emergency fund. So basically, to achieve this target is their respective by time frame. Specific rate of return here is 7% to 9% per year. 7% to 9% by annually, and then the return is target to ambition for the essential for goal attainment. Okay, for the last part is risk tolerance. For risk tolerance, have a method Q&A plus consultation at Mukmin Group. Risk capacity is high, young age plus long horizons, and then risk willingness, fine profile, and also for the balanced portfolio. So for the risk tolerance and investor profile, is this classification is not an endorsement of the speculation, by reflect on the two key of factor. The first one is long investment horizon, which is a low time to recover from the market volatile, and also growth the requirement needed meet to 7 to 9 return of the objective. So basically his profile growth by the oriented investor, but however this informed by his past experience, which is the portfolio must be engineered for the growth without including the emotional stress. So this is the solution by the risk tolerance and also the investment objective to achieve their goals for Mr. Imran, sorry. Okay, I will pass to the next presenter, which is part C, investment policy and statement.
Okay. Thank you so much. So now we will move on to part C, which is the investment policy statement. Next slide, please. Okay. So in part C, I will be presenting about the investment policy statement, or we will call it as IPS, that we have developed for Mr. Imran. So the IPS is they act as a long-term guide for Mr. Imran, where it will clearly define his goals, investment horizon, acceptable level of risk, and the guidelines in his future portfolio that he must follow, mainly to avoid from like as a lesson learned from his past speculation behavior, to minimize more emotional decisions. So next, the purpose of the IPS also contributes to the more consistent discipline and measurable progress over time. So, sorry. Okay. Moving on to the investment objectives of Mr. Imran. He has three core goals. So he has for long term, medium term, and short term, which, as we can see here, for long term, he plans to have his retirement savings over for 1.5 million ringgit. Medium term for his property savings, and short term, which is around within 1 to 2 years, for his emergency fund. And to achieve this combined objectives, we determined that his portfolio should target an annual return between 7% to 9%, to allow that to promote growth with stability compatible with moderate risk profile. So, as mentioned before, after assessing Mr. Imran's risk tolerance using our questionnaire, and the more detailed consultation at Mukmin Group, since Mr. Imran is still a young adult and has a long investment horizon, he is suitable to have a moderate risk investment style, which is based on his past losses, acceptance of short-term fluctuations, understanding of long-term returns, and balance between so that it can balance between his growth assets and stability assets, which means that his portfolio ensures he remains comfortable and committed during, especially during market volatility. Now we move on to the proposed asset allocation strategy for Mr. Imran, which we have 60% is for his equities, 25% for his bonds or fixed income, 10% for properties or real estate, and 5% for cash. So why this allocation? This allocation is most suitable for him as it supports both capital appreciation and risk control, and a higher equity. So hence a higher equity exposure is most appropriate. But like at the same time, the allocation for bonds and cash protects him from excessive volatility. Next, so for his investment constraints, which are divided into liquidity needs, time horizon, legal and regulatory considerations, and unique circumstances. So under the liquidity needs, he would need around 12,000 ringgit in his emergency fund, which is a highly liquid and low risk assets, and a monthly investment capacity around 500 to 800 ringgit. So with this, he cannot lock in funds in illiquid assets, such as long-term private funds or higher commitment to real estate projects. Additionally, because Mr. Imran is also taking his he needs to repay his existing PT and motorcycle loan to reduce his financial buffer. So these constraints justify maintaining sufficient cash allocation and stable fixed income. So for his time horizon, Mr. Imran has around a 39-year time horizon for especially for his retirement, which is suitable for his growth asset like equities, which is also like the and then his emergency fund is at a low risk, and it must be kept safe and liquid. So because these horizons differ significantly, they require a segmented portfolio and for clarity and discipline. And we would recommend sorry. And we will recommend this as to maintain proper alignment across all objectives. Next slide, please. Okay, so moving on to the legal and regulatory considerations that will affect Mr. Imran's investments. First, mainly because his unit trusts are regulated by the Securities Commission, as they provide investor protection and transparency. Tax EPF contribution reduces investable cash, possible tax implication for investment gains, which would like reduce his monthly investable income, and depending on the product type and holding period. And importantly, he must also ensure that his repayment of PTP10 is timely, as default may affect his credit score and future financial options. And next, for the last investment constraint, which is unique circumstances, Mr. Imran is currently working as an assistant accountant, which he has a monthly income at around he has a low income at 2,000 ringgit. Although that may seem a lot as a student, but it's still below the Malaysian average for monthly income. So this means that he required disciplined planning. Okay, and then also after calculating his net worth, he has zero net worth, which means that he needs an urgent need for sustainable wealth building. that, or in other words, he needs to build his financial base from scratch. And from his past speculative losses indicates that his investment behavior needs a strict discipline, as Mr. Imran is quite emotional to volatility. But with his young age, it does mean that he has a more strong compounding advantage. So moving on to the performance measure. So to ensure that the investment policy statement stays effective, we managed to identify a clear performance criteria, which the annual return achievement of 7 to 9% target return, and the benchmark comparisons according to KLCI, the volatility should remain below 20%. The maximum drawdown is below 30%, and we should also use the Sharpe ratio to measure the risk-adjusted performance. While also at the same time, we should, for Mr. Imran, should goal tracking the emergency fund, property savings, and retirement progress, so that these metrics will allow him to have a transparent evaluation for both performance and risk exposure over time. So, okay, and then last but not least, for review and rebalancing, we provided a structured review and rebalancing process. For quarterly performance review, is to monitor his overall performance. Rebalancing annually when the drift is over like 5% from its target. Annual full review of income changes, huge life events, such as if he decided to marry or change his job or any future life events. And then he needs also an immediate review when major life events occurs, as mentioned, such as job change or unexpected financial commitments. So for the three portfolio segmentation, which is emergency fund, property, gold, and retirement portfolio, which will ensure that the portfolio remains aligned with the IPS and evolves appropriately as his situations change. So, in summary, the IPS allows a complete discipline and realistic investment statement policy for Mr. Imran, as it would give a clear path for his financial goals into a more structured system that balances growth, stability, liquidity, and long-term discipline. So that is all for me. Thank you so much. I will now pass it to the next presenter.
Okay, thank you. So next, I'll be presenting my part, which is assessment of socio-economic and political scenarios. So next slide. So socio-economic factors. So socio-economic factors is the global investment. So I'll be introducing what is socio-economic factors first. So the global investment landscape in 2025 is being fundamentally reshaped by interconnected socio-economic and technological forces that present both significant opportunities and considerable risks towards investors. So it gives that strong global transformation driven by demography, technology, wealth inequality, macroeconomic indicators, and macroeconomic indicators. So I'll be talking first about the demographic transformation. So the demographic shifts represent one of the most significant long-term forces influencing investment decision. So if you've seen the global population, it's reaching 9.7 billion by 2050. So with this, with increase of the population, there will also be an increase of aging population. So it will be an opportunity for investors to invest in healthcare, telemedicine, and robotics demand. So increasing in population also increases the urbanizations of cities. So infrastructures, agri-tech, and agriculture will also benefit from this demographic transformation. So next is technological advancement and AI-driven disruptions. So artificial intelligence represents a technological inflection point comparable to the internet revolution. So AI has experienced rapid adoption across governments, business, and individuals, with the full suite of AI applications still developing. So with this, opportunities for investors is in the AI model developers, infrastructure providers, productivity enhancers, and industry disruptors. So next is about wealth inequality and capital allocation inefficiency. So rising in global population will also increase the rising of inequality, influencing political and economic stability. It is something that is very hard to control. So it actually creates opportunities for investors to invest in affordable housing, healthcare, and food agriculture technology, as those are things that will be in demand as uh, the gap between the rich and the poor is increasing. So next, I'm going on with economic indicators. So the first economic indicators will be the GDP, the global domestic produce. So in 2025, the global GDP growth is projected to reach around 3.1%. So with the US expanding at 2.2% and the Eurozone accelerating to 1.3%. So moderate GDP gives opportunity for defensive sector and fixed income to shine. So high growth in GDP indicates a strong economy and more opportunities for investors to invest in. So next economic indicator will be the inflation. So inflation, which we can also use the CPI, the Consumer Price Index, to measure. So the inflation is stabilizing around 2.3% this year. So low inflation will make bonds more attractive, and it will give a real positive returns. So people can use inflation hedge such as tips and REITs, which is still relevant. So next slide. So the next indicator will be the interest rates. So central banks globally have shifted towards monetary easing in 2025, with the Fed targeting rate reduction. So with global rates declining, it will impact a lot of industries. So bonds will increase in value. Growth stocks will be supported by the reduction of interest rate. Real estate and infrastructure will benefit as they will get cheaper price, and a lot of customers can buy more real estate with a lower rate. But there's a drawback, which is the cash return will weaken. So next, we'll be going on to political climate. The political climate, rising in global protectionism. Wait, I'm sorry, so I will repeat again. So the global political environment in 2025 is dominated by rising protectionism and national security prioritization, particularly under the US administration's new focus on economic nationalism. So the US implemented substantial tariff increases through reciprocal tariffs and 24% baseline rates, so creating significant policy uncertainty that weighs on global economic growth. So governments worldwide are prioritizing strategic sectors, including artificial intelligence, semiconductors, which is in Malaysia, biotech, aerospace, and critical minerals, shifting from market-driven approaches towards security-aligned industrial policies. So strategic portfolio implication. It helps with geographic diversification essential in emerging markets such as Southeast Asia. It provides growth in sectors rotation into renewables energy, for example, the windmill, AI industries in infrastructure and defense. So next. So part E will be the conclusion. So as a personal experience, our visit to Mukmin Group with the client, Mr. Imran, we consulted with Ms. Lutfia in regards of Mr. Imran's financial. So Ms. Lutfia has identified key issues, which is the first one is emotional investing. Mr. Imran uses too much emotions to invest, which is bad. He should use more logical reasoning in his investment decision. So next is his speculation habits, which incur a lot of losses, and this is bad. And next is about need for structured long-term plan. So as Alia mentioned previously, he need to have a structured long-term plan for his investment to grow. So Ms. Lufia suggested a monthly of 800 ringgit contribution from his from his income towards his strong long-term growth potential. So with 800 ringgit in 6% interest in more than 30 years time, it will reach around 1.2 million. So the value of professional guidance. So in that event, we saw the value of professional guidance firsthand. So the learning and takeaways. So the true risk tolerance must combine psychology and plus capacity. The systematic investing beats speculation. Dollar cost averaging reduces timing risk. Advisor's role is not only technical but behavioral coaching, and emotional discipline is key to long-term investing success. So influence on understanding of asset allocation. Asset allocation is practical, not theoretical. Segmentation of portfolios critical to avoid confusion. Highest return portfolio is not always best and is one of the it's not always best. The best one is the client that can stick to a good plan. And lastly, the behavioral finance plays a huge role in long-term performance. So that's all from us. Thank you.
Dah.